Welcome back to the Property Trio podcast, the podcast for the sophisticated property investor. Joining me, as always, are Dave and Mike. It's Wednesday, February the 19th, and just yesterday the Reserve Bank of Australia made its highly anticipated decision on interest rates. And we've finally got one, a reduction by 25 basis points, bringing the cash rate down to 4.1%. Who won the bet?
Wasn't me. I'm looking.
That would drop.
I'm looking for some side action. That there's going to be an election called this week on the back of that, because I think Labor will want to ride that momentum. That's the only hope I've got of chasing my losses.
Yeah, I think we've got an election call for early April. Well, after a prolonged period of higher interest rates, this long-awaited cut is expected to increase borrowing power, ease mortgage stress, and boost market confidence. When the RBA moves to cut or raise rates, it often marks the beginning of a new cycle, which means that there are multiple rate calls, not just one, contrary to what our Reserve Board Governor told us yesterday. A reduction in interest rates will spark life into some markets, and investors are always on the lookout for well-priced markets to take advantage of. In today's podcast, we're delving into the data points that suggest that Melbourne could be one of those markets. Interesting. Melbourne's property market has been subdued for quite a while now, but there are signals that things could be turning. What's been happening in Melbourne over the last 12 months since COVID and over the last 10 years, Dave?
Yeah, that's a good place to start, Cate, isn't it, to give us that perspective of Melbourne versus the other capital cities. So Melbourne's property market has faced a modest decline with values dropping by 2% over the last quarter and 3.3% over the last 12 months. Since the onset of COVID-19, growth has been quite anaemic compared to the other major capital cities, particularly the outperformers such as Perth, Brisbane and Adelaide, which we all know have seen significant price appreciation.
Yeah.
And then if we just look at, to begin with, since COVID hit, Adelaide has risen by 73%, Perth by 76%, Brisbane by 68%. Then you fall way back of the big five capital cities, Sydney to 27%, and Melbourne's only risen by 7.8%. So, it's really underperformed since March 20. But look, property prices that wasn't day one of the property market's beginning. So if we want a bit further, I guess, context, we can go back 10 years. So since Jan 2015. And isn't it weird to think that the start of COVID was now 5 years ago?
Yeah. It is, yeah.
It's like half of the last 10 years now. That sort of, it's always felt like it was 2 or 3 years ago. Now it's crept up on us. But so for the last decade, Adelaide's risen by 93.4%, which, as we touched on recently, Peter Cate will be quite happy about. Brisbane by 90%, Sydney 68%, Perth, surprisingly to some, has grown by 55% only, and Melbourne 47.5%. So, Melbourne has been the clear underperformer of the big five cities, particularly in the last 5 years since the start of COVID by a long way, but still it's the lag performer over the last decade.
Yeah, what are some of the key indicators suggesting that Melbourne might be at a turning point?
Well, before I jump on the Yay Melbourne bandwagon of you two, patriotic citizens, I'm not sure necessarily that there's a lot underpinning that. I mean, just because it is underperformed doesn't mean it's due to perform better. I mean, we do need to remember things in property history, like the fact that the median house price in Perth was once higher than Sydney. That happened sort of once and then never again. So if we follow that kind of same philosophy, that doesn't kind of fit into the narrative. But I will certainly admit that there are some indicators that the price point is obviously a big one, especially for investors and first home buyers. They're not having to spend, $800,000 or $900,000 to get into something. They can actually get something a little bit cheaper than that. But one of the big ones is the rental yields. So for the first time in history, the gross rental yield series from CoreLogic surpassed Brisbane and Adelaide in 2024. So back in 23, Melbourne's average rental yield was 3.3%, a full 1% below the average Brisbane yield of 4.7, and 0.7 below Adelaide, which had an average yield of 4% for the 2 years ago, and has surpassed them both. So an extra 1% yield on $1 million property is 10 grand per annum for the investor. So really, you're now going to receive less rental income to cover your mortgage when buying in Brisbane and Adelaide than you will in Melbourne. And that is a meaningful statistic for investors that are studying their cash flow.
Yeah, look, it's a good point, Mike. And also, I think like what today's episode is about is just looking at some data points that might suggest Melbourne is on the cusp of a recovery. It's not necessarily saying we are sure it is, we guarantee it is. It's just looking at the data points that could suggest it is. Now, personally, I think it will recover, but that isn't to say that, we're barracking necessarily for Melbourne, or it's a guarantee it will. And we can touch on some of the risks with, Melbourne and Victoria as a state as well, that could continue to hold back the property market. But yeah, today's really about unpacking. There's a lot of chatter in investment circles across the country about Melbourne, and anecdotally, Cate and I have certainly felt it on the ground, and it's starting to be talked about more and more in the media as well. So, I think it warrants a deeper dive, which is really what we're looking to do in today's episode.
So sensible, Dave.
I think
sometimes
it's
infuriating.
Really, no, I think sensibility is so important when you're talking about picking spots, because we've always talked about long-term investing, and people will jump around picking the next city that will go bang, whether it's a hotspot regional location or a capital city. And you've got to understand your growth drivers and your threats. And I think this is what today is all about.
Because I think that the point is, Dave, you sort of said, I believe it will recover. I believe it will recover as well. But what we're kind of facing at the moment is that gold rush mentality that, the people that maybe missed Perth or were in Perth and they're like, oh, I am hooked on that, nearly 20% growth in 12 months. And a lot of people are saying, well, it's Melbourne. I believe in the recovery. Do I think Melbourne's going to do 20% in the next 12 months? No.
Nor do I. Yeah, I don't believe it will in the next 12 months either. I think in 12 to 24 months, could it do 10 to 20%? Yes. But I think that the momentum builds and then it comes with a flurry.
So, you're very positive about 2026, Dave.
That's right. 2026 is the year for me. So look, I think they're really good points to make, Mike and Cate. And just back on, Mike, your points around rental yields. So for Melbourne, they've steadily been rising since 2023, whereas in Brisbane and Adelaide, they've been declining in the last 2 years. So, we certainly know that high yields are often a sign that prices are low due to the inverse relationship between prices and rental yields. So basically, for our listeners, if prices stay flat or fall, as they have in Melbourne, and rents increase, or even if they remain flat while prices are falling, it means the rental yield increases. And that's exactly what's been happening in Melbourne.
Couple of real forces there, Dave, and you're absolutely right. When prices are static and the rents continue to climb, Melbourne's also been threatened with rental stock decay. So our numbers of available rental properties have absolutely decreased, and that's broadly been in response to some of our state and federal or state legislation. But it's also been based on increased interest rates and investors looking at their portfolio saying, well, it hasn't performed very well. All of the stats that you just talked about in the last point, a critical investor who is a bit impatient will look at that and say, well, maybe I'll get off this horse and find a different horse to get me a better result in the race. And so Melbourne has had a lot of investors decide to invest elsewhere or to to sell up part of their portfolio. And so that's really driven our rapid increase in rental yield as well, because when you've got reduced stock and you've got strong demand, obviously it pushes prices up.
That's a really good point, because if you look at, say, Adelaide, Brisbane, I mean, the yields will go down just because the prices are galloping away. The median's just on the hunt. Does that necessarily mean it's a tight rental market? Not necessarily. However, we are sort of seeing, okay, well, the yields are better in Melbourne because the prices are doing nothing. But in concert with that, we've seen a lot less rental stock coming on. It's actually the last sort of bit of research that we did last year, it was contracting, and the lending indicators for Victoria were predicting a further tightening as well. I suspect that's changing now on the back of the sentiment and on the back of you guys saying your phone went off the hook yesterday when rates cut and everyone's, wanting to dance.
Yeah, very much so.
Yeah, really good points. And people, we know when investors are looking to buy, they're looking at that point in time on the day they buy and what's the rent they're getting for the price of the property. And so right now, on average, if you look at Melbourne and you look at versus Brisbane, Adelaide, and far above Sydney for the same price property, you're getting a better rental return, and that's something that borderless, investors who are willing to buy in different states will certainly factor into their decision making.
I'm about to ask a question that takes us away from investors and focuses on home buyers. And I think I could answer this as well. But Dave, I'm keen to know from you, what's the home buyer sentiment and how are buyers in Melbourne feeling right now?
Yeah, look, I mean, we certainly see it on the ground, and I'm sure you'll be able to talk to that, Cate. But it probably just as important, or more, maybe more importantly, to I guess the general populace, it's really shown a jump in Victoria in the actual consumer sentiment surveys that have taken place. So, and this is in stark contrast to Perth, Brisbane and Adelaide, where it has fallen significantly. So the Westpac Melbourne Institute Consumer Sentiment Survey, the time to buy a dwelling component index of it, nationally reached 89.9 in January. So that across the nation is the highest level it's been in 3 years. And over the last 12 months, that index has recovered by almost 20% as consumer pessimism has lifted while rates have stabilised for over a year now. And obviously with yesterday's drop, the first fall in rates for 4 years, we expect that time to buy a dwelling index to recover even more. But when you break it down into the state by state, that's where the real telling of the story is happening. So in Victoria, there's been a noticeable jump with a huge 31.5% surge to the point that it's actually in positive. It was a positive index reading of 101.3 in November for Victoria. So that indicates most buyers in Victoria, and so you could, I guess, also suggest Melbourne believe now is a good time to purchase. Now, this contrasts with relatively poor sentiment in three of our strongest performing markets over the last couple of years. So in November, the home buyer sentiment slumped to 80 to 87 range in Queensland and South Australia, and Western Australia was right in the doldrums at just 66. So there seems to be a general feeling that the property party is coming to an end in those three capital cities. But, that this consumer sentiment survey certainly suggests is just another leading indicator that Melbourne, could be a place to look to put your money into.
If we look at the house price expectation index, that's really looking at confidence in future price growth, in February up to 142.3, and Victoria was leading the charge there with the largest increase, with expectations jumping 11%. So that's evidence that some markets, of course, are cooling, but buyers in Melbourne are starting to sense an opportunity. And sentiment can be a really the first thing that we see before we actually see the data coming through in a marketplace. So it's signalling a potential price shift. But Sentiment's a tricky thing, and I think I've mentioned maybe on this show or in some media that we are getting to the point, I think, where sentiment is disproportionately powerful than say what it was 10 or 20 years ago, when we've got some big buyer's agent businesses that are doing 50, 100 deals a month. There are certain buyer's agents that will follow what they're doing. They might have big media teams and Facebook ads and those sorts of things that'll get eyeballs following it. Sorry?
This is a really worthy conversation, is how do actually buyer's agents across the country who buy interstate, how are they changing the marketplaces of even capital cities now?
Yeah, certainly in smaller cities, they absolutely have a punch to the results and the direction of the market. Because if you're going into a town like Ballarat, for example, and it's 100 and something thousand people, it's not a massive city, but it's a significant regional city. If you've got 3 big fat buyers agents firms saying this is the next hotspot and they're targeting all of the stock, well, they're fighting each other. It's an artificial environment then, which can be scary. And I'm not necessarily saying that happens in Ballarat, but it happens in cities of that size, and it does skew the market.
And there are the sort of the hangers-on and the followers that follow some of those big groups. And then outside of that, we do live in a world now where there are some big Facebook groups, for example, and other communities, online forums where we're talking, tens of thousands of investors that are kind of thinking, all right, well, this is the place to go, and people are kind of following that. I think it can't work in Melbourne. My hypothesis is there's somewhere around about 500,000 property transactions a year, and we're really just talking about investors coming in and skewing things. And if we take, say, 30% of that 500,000, that's and assuming that every single one of those investments is in Victoria, which according to our data now, which has seen a bit of an uptick, I mean, it was long-term average 16% of people that came through our doors were buying in Victoria. That was 9% on the sort of decline pre-land tax, post-COVID, because of the performance, I think. That went down to 4% when land tax came in, and numbers that I got for 2024 saw that uptick slightly to 7%. So we're not going to see 50% of investors dive in. But if we take 500,000, we multiply that by 0.3, because, a third roughly are investors, and then we multiply that by, let's just say 50% of people go into Victoria. The numbers aren't big enough to fundamentally change prices. Melbourne's just far too big.
Well, it'd be interesting. Like if you go 30% to 150,000, and then let's say, well, 50% is not going to get to 50%, but let's even say 20%. That's 30,000 transactions, and that's at the high end. I mean, your numbers have been 4, 7, 9%, which is even half that. I think if you start to get hundreds of buyers agents transactions happening even in a Melbourne or Sydney, plus then the chatter on the investment sites and the Facebook groups and that sort of contagion effect spreading, I think it's potentially able to have a material impact even on our biggest capital cities.
I think we've got to factor in owner ocs for that kind of activity as well. Yeah. When they're targeting a market and increasing their budgets, acting emotionally and sometimes irrationally, they are the results that can also and usually skew a market even more. And I want to circle in on that because, the question I asked you, Dave, was what does home buyer sentiment look like and how are buyers feeling? Yeah. And you've both talked about what's showing on the consumer sentiment survey, which absolutely reflects what's going on at the ground. But investors and homeowners do generally think differently. The only time I see homeowners thinking a bit more like an investor in terms of timing the market is when they do something really strong and really brave, like sell their property when the market feels awful and then rent for 2 years and then, hang about. Sorry, I've got that around the wrong way. I'll say that again. Sell their home when the market's going really strong and then hang about for a couple of years while the market is struggling and then decide to purchase while the market's, in its doldrums. And that's a very hard thing for anyone to do, because none of us can perfectly time when a market has peaked and when a market has hit its trough. But you sometimes get owner-occupiers that are pretty bullish and pretty willing to take that risk and back themselves and time the market. But otherwise, most homeowners act like the rest of the herd. And, when the interest rates are cut, they all want to get back into upsizing or whatever, because they don't want to be left behind. They're scared that there'll be a rush and they'll experience 2021 conditions again. I've certainly had a lot of those discussions with people. And as you said, Dave, yesterday the phone was ringing because I had a lot of people that were probably waiting for the bell to jump back in. And I've said it before and I'll say it again, the best conditions that I've had over the last few years to buy property were probably last year.
Yeah,
and late 2023.
That's been a big bell. Yesterday's
Huge.
fall. I'm sure it's recency bias, but in my 25 years of being in the industry, or when I was at the bank, you could say it's a little bit longer. But I just don't remember the excitement around a rate reduction like there has been around this one.
I just think the magnitude of mortgage cost increases over a short period of time, with all of those successive rate increases, was a real shell shock for people. And then they feel like they've been strung out with this cost of living crisis, experiencing much higher mortgage repayments than they have, waiting for some kind of reprieve. And even 25 basis points is enough to excite people. But if I'm talking about what I'm seeing on the ground with owner-occupiers, I think there's a genuine fear that there'll be a market rush again. That seems to be stronger than the opportunity with a little bit more borrowing capacity. I think the fear of missing out is greater than the opportunity.
And, as we've talked about, often that upper quartile, which is where the home buyers tend to play, when it tends to move first on a rebound, and it's fallen the furthest as well. And so savvy home buyers will be across that. They'll be seeing prices, you see it around here. Everyone, who owns a home tends to follow the local prices, and there are prices that have been going for less than properties were selling for, 3-4 years ago. That's definitely, for people who've been thinking about it, that's definitely a bell that's rung for them to start making a move.
Yeah, you're absolutely right. And segmentation is a great discussion. I'll save that for now. And I'd like to ask you, Dave, how have Melbourne's median market property values changed over the past few years, and what does this tell us about where the market's headed?
Yeah, look, we've talked a lot about mean reversion, and Mike's going to unpack it in an episode. And I think, basically what it is when, historically, in terms of the prices of our capital cities, let's say on average it's been Sydney first, Melbourne second, Canberra third, Brisbane fourth, and they've fluctuated up and down. But if you look over a map of the last 30 years, it's generally had this sort of pathway. Well, what's happened, and a lot of people are looking at this, and a lot of investors are, rightly or wrongly, whether mean reversion should happen, whether it will happen. They've looked at how Melbourne's property values relative to those cities are much cheaper right now. And so just to go through some examples with our listeners. So at the start of the pandemic in March 2020, Melbourne's median dwelling value commanded a significant 37% premium over Brisbane's. So it's 37% more expensive than Brisbane. Since then, Brisbane's property values have grown at more than 6 times the rate of Melbourne's. So in May 24, Brisbane's median property values for houses and units surpassed Melbourne's for the first time since 2008. Meanwhile, Perth and Adelaide are steadily closing the gap on Melbourne's median values. So when you factor in all property types, Melbourne has fallen behind Brisbane and Adelaide and Canberra, because one of the reasons for that is it does have more units than Brisbane and Adelaide, which drags down the all dwellings median and has Melbourne actually sitting in sixth place, I think, fifth or sixth place. For houses, Melbourne could drop from perennially being second or sometimes third behind Canberra, to being sixth where it currently sits. Yeah, so it sits currently sixth for all dwellings in terms of its median price. So for our listeners and people watching this stuff, that is unprecedented. It's even more stunning when you consider Melbourne will soon become the most populated city in the country, surpassing Sydney. So Melbourne's home, if we start now, just talk on Sydney, Melbourne's homes are now 38% cheaper than Sydney's, based on current figures from CoreLogic and PropTrack as of Jan 2025. The difference has historically been 29%. In dollar terms, currently, the difference between Melbourne and Sydney is a staggering $557,000, more than $500,000 for the average house. So that's a big number. People who are considering, should we move interstate for a better quality of life? We can get a similar paying job. They're going to look at those sort of numbers. So we also mentioned in our last week's market update episode that Hobart was inching closer to Melbourne's median, which some might almost fall off their chair when they hear that.
Yep.
So we did some digging and found out that in 2015, Hobart's median property price was 43.9% lower than Melbourne's. But as of 2025, the gap is now just 14.8%. So again, it's just the question we must ask ourselves: are Melbourne's median prices likely to stay at current levels, or revert to something close to the historical norms?
You know how we feel about median values when it's not segmented into houses and units, though. There are no towers being built in Hobart, and there are gazillions being built in Melbourne. So that differential, I would anticipate that, if you consider the amount of construction and apartment buildings that we've had on our horizon since 2015 here in Melbourne, I wouldn't expect us to get back to that historical differential in a hurry anyway, just because of that sheer impact on median values when you're looking across all properties.
You're saying that you wouldn't expect us to get back to 40% above Hobart? Is that what
No,
it was?
that's right. Yeah, because Hobart, there are no big tower construction projects taking place down there. So you're talking about houses and lots of gorgeous period houses as well. So it's a very different market when we consider the housing styles and types.
Yeah. Look, it's hard to measure those things because obviously you've got a much larger population in Melbourne, so that sort of, assimilates those sorts of higher density apartment builds. But still, some of those numbers really sort of jump off the page, don't they?
Oh, 100%. Yeah, it's intriguing data, and I can see you've got a lot of tables prepped. I saw when on the topic of mean reversion. Yeah, I'll pop all this in the show notes. Yeah. There was a recent chart, and, well, it was actually a table. It was really interesting because it wasn't just showcasing the Sydney-Melbourne ratio. It was actually showcasing all of the capital cities against each other in a great table. And it was, definitely highlighting the fact that Melbourne's performance has been, as you say, anaemic, Dave.
Yeah.
Yeah, it showed a differential between pretty much. Yeah, that's right. Now let's discuss affordability. How does Melbourne compare to other cities in terms of price to income ratio? Mike, I'm going to ask you this question.
Yeah, look, this is something that I've done a little bit of work on, and even with the Perth boom, it's still got a reasonable affordability because incomes are so high, right? So based on that metric, it's got room to move. And Victoria's no real different to that. It's seen higher than average income growth. Between March 2022, the market peak, and June 24, dwelling values in Melbourne fell by 4.2%, while incomes rose an impressive 8.8% over the same period. So as a result of that, the dwelling value to income ratio dropped to 7.1 in June, which is its lowest level in nearly 4 years. And if we Contrast that to Brisbane and Adelaide. They've seen their dwelling to income ratios climb to record highs, reaching 8 and 8.6 respectively. So this means that the price to income ratio for Melburnians is far superior than those living in Brisbane and Adelaide, in concert with the yields that we just talked about, and slightly better than Hobart, where they're sitting at 7.2%. And of Sydney, obviously it's always winning the gong there because it's just so expensive, and it's not really about incomes. I remember people sort of saying, oh, it'll never go above, 10 times, but it just keeps soaring along because it's less about what people get paid. It's also about some of the nitty gritty of the transfer of intergenerational wealth and all those sorts of things. So it kind of writes its own songbook there. So, but the demographic shifts certainly cause people to move to a new location or capital city, chasing better price properties and higher paying jobs. I think sometimes that can be a little bit overstated, because how many of us want to uproot and move 1,000, 2,000 kilometres away from family and friends and what we know? But we certainly saw that happening during the pandemic, and I think a lockdown will really do that to people.
Yeah, look, it's still very much happening for Sydney-siders.
Interstate
It does.
movement.
Yep, very much so. You'd be surprised how many Sydney-siders decide to move to Melbourne and engage. I'm just one person who's able to measure that. There's many buyers agents that could measure it, but I'd imagine there's some really good, freight and logistics transportation companies that could verify it as well.
Yeah, that would be great data. I wonder if, say, Melbourne to Sydney is a similar sort of thing to Melbourne to Brisbane. I wonder if distance is an impediment, but I guess once you move all your stuff, you're done. But, I don't think we see, at low points in the cycle with Perth, necessarily lots of people going from Sydney or Melbourne over to Perth in the same way. But, Sydney and Melbourne, when we're not really that far away. The climate is somewhat similar, although
we have less rain.
Yeah, right.
Oh, come on, you're sugarcoating it. Melbourne's weather is terrible.
Do you have a sun there?
We either have a furnace or no sun.
Yeah, good.
Our summer's been awesome. Our winter's no good. Trade winter away, that's for sure.
Every day, yeah. The only cool thing is different wardrobes and layering.
Yeah, that's right.
Melbourne is pretty fashionable for that. I think I think the quintessential sort of fashionable look involves like overcoats, because you can really put a little bit of flourish into it. Yeah.
Over a nice shirt.
Yeah, you compare people sort of walking through the street in Melbourne to, say, Brisbane. Melbourne's always better dressed, and part of that is just because if they don't put more layers on, they'll perish.
Yeah, pretty much.
As stylish as thongs and shorts are.
Yeah. But Dave,
on that note,
I want to know about population.
Yeah. Our population's growing rapidly, so how does it factor into the property market?
Yeah, look, just sort of touched on Melbourne's population likely to go above Sydney's. So the federal government Centre for Population predicts Melbourne will lead the nation as the fastest growing city over the next decade. Now, that's thanks to mostly overseas migration, resulting in an annual growth rate of 1.7% for Melbourne. So with a current population of approximately 5.2 million, according to the ABS in June 2023, essentially that translates to an extra 88,000 people needing housing in Melbourne each year. So obviously that sustained population growth will naturally place upward pressure on housing demand, further tightening supply in the already constrained market. So if we contrast this to Sydney, Sydney's been experiencing a net loss in interstate migration with the latest annual figures for March 2024 from the ABS, revealing that 31,000 more people left the state of New South Wales and moved into state, then came into New South Wales. So, and according to the Centre for Population, this trend is projected to persist over the next decade. So by 2032, projections indicate Melbourne's population will surpass Sydney's position as Australia's largest city, and the surge in population is likely to exert upward pressure on housing prices. You would expect. So it's just another pointer as to why Melbourne will actually they're going to need to build more houses, and it's going to have the most people coming into it each year looking for new houses. So that obviously has to create some pressure on the property market now. So it's just another data point. I mean, Melbourne's expected to increase by 88,000 per annum, Sydney 64 because of overseas migration, Brisbane 33, Perth 31,000, Adelaide 12,000, Hobart 3,000, Darwin 2,000. So that factors in interstate as well as overseas migration.
Do you know what I find really intriguing? We don't talk much about overseas migration into our regions, but there are absolutely some incentives available, and certainly from visa and job background point of view, you can go into that data and see what the regions are screaming for, and what sort of workers they're calling out for. Certainly medical is a big one, and I always wonder what the impact of some exciting regional activity times a few in each state can do for the capital cities. It doesn't necessarily mean that people will do their mandated, however many years in a regional town and then just move to the city. But it does put a strain on the city in terms of resources, because there are some things that regions don't offer that patrons or patients or whatever will need to source in the city. And I think that's, obviously it's not going to be super significant, but that would play a role, I would imagine, in all kinds of things relating to the pressure placed on our cities.
Yeah, it's definitely going to play a part and have an impact as well, isn't it?
Yeah. I've got a question about borrowing capacity, but I want to ask you first, Mike. What role does borrowing capacity play in Melbourne's potential rebound?
Well, of course, the more you can borrow, the more you can afford to spend, and that's potentially going to put pressure under prices. The big elephant in the room is what sort of cycle are we in now with interest rates? Is this something that the RBA is going to really want to wash through, or because of the lag effect of interest rate changes? I mean, there's lots of arguments from economists to say, really, it's kind of 12 or 18 months to see the full result of it. There is a little bit of a concern that they probably have gone a little bit too late and they might be chasing it. So it's just a question of, are we going to have the one and we're going to sit and wait for that to wash through, or have we waited a little bit too late and we're going to have to sort of chase it? Because I think the borrowing capacity stuff, with 25 basis points, it's not a huge change. So when the people were waiting for that bell and they all rang you yesterday, Cate, I would say if you take one thing from the show, it's don't wait for the bell. Like as you said, the time to buy was a year or two ago. But it does kind of make sense that in concert with those affordability improvements for Melbourne, the rising yields and that extra capacity, those are all positive things for prices for Melbourne.
Yeah. Dave?
Yeah, well, look, one thing you do see at the coalface all the time with particularly home buyers, and less so, but also investors, is they want to buy something that costs $30,000, $50,000, $100,000 more than what they've been approved for, often. And so you try and create a margin there, so there's wriggle room. So, okay, your limits, you only want to purchase up to 800, but let's get you approved up to 850. But there's a lot of people who don't actually have that wriggle room. 0.25% can, for a lot of people, will mean a change in borrowing capacity of probably in the ballpark of $30,000 to $70,000. So it can make a difference.
That's a bit more than I thought, Dave. So yeah, that's a bit more of a fire under the backside than I thought it would be. I was sort of looking at more so on the changes to the repayment sort of thing, the capacity. That's obviously your area much more than mine, but yeah, that's reasonable. And if we get to 75 basis points, then that's a lot of more wiggle room, right?
Yeah, then you're starting to get into six-figure differentials for what people can purchase. So you really start to make a material difference. Then there's actually been some other things brought in. So some people might have already read in the paper, additionally, Labor's plans to ease HEX debt repayments. So they've recalibrated indexation to wage growth rather than inflation, which will improve borrowing power for particularly young Australians whose HEX holds them back a lot. So they've basically said to the banks that you don't need to factor in the HEX monthly repayment the way you have historically. So, that can change borrowing capacities by $25, $50, $100,000 for often first-time buyers who still have HEX debts. So that's yet to play out. We'll see how the lenders adjust to that, but that's something they've just, actually changed. And then should the coalition win the next election, they've proposed to allow first home buyers to use their superannuation for a home deposit. So that would obviously further stimulate demand, particularly in the entry level segment of the market, to push up prices. And look, there's a Victorian election in 2026. And at the moment, the polls would suggest that the Liberal government would get in here, and you wonder if they might make changes to the land tax levy that has been put in the last couple of years as well, which I'm sure would further speed up the interest in Melbourne post that election next year as well. So there's some other factors there that can change borrowing capacity and affordability.
Yeah, wow, you've talked on quite a few, Dave. I'd love to see that repealed. That would be awesome.
Oh, yeah.
So based on everything we've discussed, is now a good time for investors and home buyers to consider Melbourne?
We've talked about a few data points that are certainly positive, and I think that's really feeding into sentiment to some degree. And 2023, 24, I sort of characterise those as the rise of those affordable markets. We saw much more investment in Perth because of its price point. We saw much more investment in regions like Townsville because of its price point. A couple of years ago, you were able to get something with a 4 in front of it, or at the very least a 5, and now those same things are 7 sort of thing. We talked about the rental yields, affordability improvements, population. That's kind of important. And if you are chasing a market that hasn't yet experienced the growth, Melbourne does have some upsides. The lower interest rates will definitely spur home buyers, especially if that capacity increases, like Dave was referring to. If we can get another 25 basis points or another 50, that could be a huge one. Market expectations, 3 to 4 reductions. So we might get, 0.5% or 0.75 of 1%. But what I think is definitely worth looking into is some of the issues around government debt, because I think that's where I would sort of take issue with some of the upside with Melbourne. I mean, Victoria's economy, it's had a hard time since COVID, obviously. The gross state product declined in 2019, 2020 and 2021 financial years, and that was the first contraction of that type for 3 decades. So that is quite meaningful. And when we talked about, property investors and how much can that sentiment move the local market, Cate was sort of saying, well, first home buyers or owner occupiers are really the key ingredient. They are the majority of the purchasers. If we can get investors and owner occupiers to kind of agree that Melbourne's worth investing in, then that's really likely to move markets. But people that are not interstate investors and are investing in upgrading their home in Melbourne, they need the certainty. They need a guarantee that they're going to be employed. They need a prospect of prosperity and pay increases. But there's been quite a few things that I think have kind of led in the other direction. For example, in 2024, there were 129,000 businesses that ceased operation in Victoria, and that was, equates to 350 daily. It's the highest business closure rate in Australia, with a net loss of 3,254 businesses that were also relocating to other states like Queensland and Western Australia. And depending on who you speak to, there's an expectation that state debt is projected to be somewhere around 188 billion by 2028. Standard & Poor's are saying in 2027 it could be as high as 247 million. In March 2024, billion. At March 2024, state debt was at 126 billion, and there are some commentators saying the debt to revenue ratio could exceed 200%, which is a huge amount. And I think every now and then we see the national percentage of debt, and we look at that and we think, oh, that's way healthier than, the 80% LVR that we're all buying property on. But that is the significant headwind for Victoria. But on the other side of that, there's been a huge investment in infrastructure projects that, Cate, we were talking about, I think, off air. Those are coming on, and that could create a little bit of a buzz. There's still people that are employed from that. There'll be ongoing maintenance and things like that. So
there'll be revenue too. We can't underestimate the revenue that can be generated through all of these things that have so far just been a big construction mess. We've had road closures and train stations out of action and buses everywhere. That stuff's not only costly, but it's not giving any return on its investment. Once they're operating, we're getting tolls, we're getting tickets. That all will filter through. I know that it won't move the needle on the debt. We've got a bigger burning issue there, but it will also change Melbourne's appeal. We've got to look at some of the things that we've invested into. We've got an enormous hospital in Footscray that you could see from the moon. And it's not very long until that's operational as well. We've got tunnel projects around the city, not just the western one, and lots of upgrades. So there's a lot in store for Melbourne, and I think that we'll all get to enjoy and experience this stuff likely this year, certainly with the rail and the opening of the local freeway here and the hospital. So there's a lot going on.
So maybe when these rail projects go, we can all jump on board and do a few laps, maybe a live podcast recording, just to give Jamie some headaches.
Look, I think they're good points, and that it's definitely a risk about the Victorian economy and the high level of debt. And I did a bit of a dive into it prior to this episode as well, but we've already, episodes gone for a fair while. I won't spend too much time on all the interesting information I found out. But look, one thing that's worth noting, it is very high debt. But Queensland's debt per capita is actually higher than Victoria's, and that'll still be the case with the projected budgets in 2028. So in 2028, Victoria's per capita will be about 37,000 for every individual in the state. The state will be holding $37,000 of debt for every individual, but Queensland is projected to be about 39,000. Now, that hasn't held back Queensland property prices, has it? And so there's a whole lot of other data, and definitely Victoria has its challenges. But so I just thought I'd use that as a bit of as a marker point. And even if we look at land tax, Victoria's land tax bump, it is now, you'd probably have to say, the most expensive when it comes to land tax. But it's not that dissimilar to Queensland's, particularly once you own over $1 million land value. They're quite similar. It does spread out as you own, say, up to $5 million of land value in investment properties. Then Victoria, based on the numbers I've got here, is $84,000, whereas Queensland's $62,000. So yeah, I'm not sure if it'll actually stop investors and stop the property market from having a rebound, at least in the midterm. I mean, if it keeps being a long-term problem, obviously it is going to have an impact.
Well, it's been an amazing Sorry, I'll start that again. It's been an amazing deep dive into Melbourne's potential and Melbourne's threats and everything Melbourne. Dave, you've done a great job with this data. Awesome insights. And I'd like to now get you to put on your thinking caps as we jump into gold nuggets. You ready?
Sure.
Yeah. I'll go.
Yeah.
There's a lot of positive data points there. Things like population, rental yields, the affordability metrics, but the sentiment is the interesting one to follow. And I think it'll become more and more of a robust indicator of future price growth. I think there's a lot of headwinds for Victoria, and I think we'll really need to be studying job creation numbers to get, I feel like, the most important data for Victoria, because we need Victorians to have prospects and to have security and feel optimistic about the future of the state. And I think once we can do that, there's no reason we can't see a double-digit growth in Victoria at some point in time. I think it just sort of remains to be seen. Is this a flash in the pan sort of gold rush mentality for Victoria, or is it about those long-term fundamentals? I'm optimistic about Victoria over the long term. I'm just not thinking it's going to be a Perth just yet.
Interesting. What about you, Dave?
Well, look, I don't know if it's going to be a Perth or even a Brisbane or an Adelaide of the last few years. I do think the numbers are stacking up that I feel like it will outperform over the next 2 to 3 years. However, it's still the same old, my message would be the same old boring message. I mean, you should be making the decision that's right for you based on your own personal economy, which means your own cash flow, your own portfolio. What price point is right for you? Does that match which capital city? Where do you already own properties? Like it shouldn't just be about, okay, I think Melbourne's time to go and everyone's talking about it online. Let's go and buy Melbourne.
I agree. My gold nugget is just about that league ladder when particular cities or regions or states are outperforming each other. We've put this league ladder up in previous episode show notes as well. And it hasn't always been Sydney number one, Melbourne number two. Sydney certainly reigned, but Melbourne hasn't always held number two. In fact, it hasn't always held in the second highest. Melbourne hasn't always held itself in the top half of all of our capital cities and territories either. It's alternated a lot over the years, and I think it bodes well to stand back and look at that and see how cities have their streaks and their returns, because it is quite interchangeable, and it's all about long term, as you've just said, Dave. If we look at this over 20 years, it's a very different picture.
What a show.
Well, on that note, good discussion.
Yeah, on that note, it's been a wonderful series, and I'll look forward to seeing you guys this time next week.
See you then.
See you next week.